Okay, peeps, welcome back. So today I'm bringing an update to all of you on my Opendoor swing trade. I'm going to go over the technicals, how much money I made, what the percentage gains were, and the reason why I decided to close the trade as of today. So let's go ahead and get into that right now. So as you guys can see, I have the chart pulled up for Opendoor Technologies. This is on the 4 hourly time frame. So where I got in was roughly about this golden cross here. You can see the yellow EMA crossed above the blue EMA. That's what is referred to in trading as a golden cross. And it moved up and it just kept going up. So here's kind of the synopsis of everything. So I got into this trade beginning on August 7th, which was, well, let's actually scroll back a little bit here. So that was just shortly after this thing had a gap down. So the earnings came out for Opendoor. The earnings were extremely bullish, as I mentioned in the previous video. Destroyed earnings to the upside, but for some reason this thing just fell off a cliff, had a massive gap down. I believe it was down about 24-25% in one day. So at that point I was looking to get in. So that's exactly what I did. I got in on August 7th. And then I closed the trade today on August 30th. The amount of money that I made was $161 even on this trade. I was looking for about a 20% profit, but I ended up taking instead about 13.8% profit. Usually my range for swing trades is somewhere between a 15 to 20% gain on any particular trade I make, but there is actually a reason why I decided to, a couple of reasons I decided to close it today. Number one, so I could lock in profit before the end of the month because there's no guarantee that the stock will keep going up tomorrow. And number two, because September is historically speaking the most bearish month in the equity markets in the entire year for like the last 50 years or something. So let's take a look at the technicals on this thing. On the 4 hourly chart, you guys can see we had a golden cross here on the MACD just shortly after I got in. And I noticed that this thing was starting to curl up. The bearish momentum was starting to slow down, indicating a reversal. It's one of the reasons I got in. It became oversold on the RSI, eventually had a golden cross. And you have all these support levels here on the 4 hourly. You got this support level here between 270 to $3, $2 to 218, and $1 to $1.29. Just like I mentioned in the Tesla video on the technicals on Tesla, what I would have been looking for was for these previous resistance levels to become support. So you got a bounce here, test resistance, flip support, retest support, comes back up to the the higher resistance, tests that, flips it into support, then moves higher. So this thing was consolidating already for a little while shortly after I got in. So my theory here was basically that it wasn't going to go back down below the support level. Reason being is because if it was going to happen, it most likely would have happened on this gap down. And you also, as you can see where I'm putting the line right here, this pretty much was a critical level of support. So you have like this little resistance cluster here and the support cluster here. And that was kind of my thinking with it, that this thing was going to move higher off of that. Now, if I switch over to the weekly chart, this was the big reason why I decided to get in right here. So we'll take a look at the technicals. The MACD at the time that I got in pulled back a little bit, but it was still above the 0 level, which anytime it's above 0, that's typically a bullish indicator. The RSI was also still above the 50 level, which is a bullish indicator, and it was starting to curl up. And that was a pretty good sign that this thing was going to have another golden cross on the RSI and the weekly. And it also retested the weekly EMAs, which was sitting just right above this previous resistance turn support. So there was a lot of bullish confluence going on here. Not to mention it had a 25% drop in one day. That's a great time to pick up some shares, in my opinion, not financial advice, as a swing trader. So it retested the weekly, just like I thought it would, and then it moved higher. So that's the technicals on the chart. Now I'm going to go ahead and show you guys the actual the trade results itself. So, from my previous video about taking profits on NVIDIA, just a quick snapshot of that. I did take profits on NVIDIA twice since it's been hitting highs. I think I've made about 160 bucks on it. I am repositioned. I have 130 shares now currently of NVIDIA, and I've upped my share count a little bit on OARC from 11 to 17. So I took some of those profits, as I told you guys before, and moved it into something else that's undervalued. As you can see, NVIDIA's at the top, and OARC's still massively discounted. Reduced my cost basis a lot too. So now let's get into the actual trade itself. So if you take a look at my Opendoor Technologies P&L, I'm up $358 on the year. I did actually trade this before, and I showed you guys in the previous Opendoor video roughly about the time frame I traded and all the details and all that jazz. So as you guys can see here, I made $160.96. If I click on 5-day, it's the same thing, about 170, 180 bucks, somewhere in there. So the exact amount I made was $161. And this trade lasted for, so started on the 7th, ended on the 30th. That's about a 3-week time frame, roughly. If I get like a really super fast swing trade that plays out like that, like snap of a finger, it's usually like a day to maybe 3-4 days tops. But the average time frame that it usually takes a swing trade to play out in my favor is about 1 to 2 weeks. So 3 weeks honestly is not really that bad. Now, what do I intend to do with the proceeds or the profit from the swing trade? Basically, what I'm going to do is I'm going to take the profits from the trade and I'm going to position myself into Appley. And the reason why it's going to be Appley, even though it is technically lower yielding than something like Tesla or any of that jazz, is because I have the least amount of shares in Appley. As I told you guys before, guys and girls, I want to get to at least 50 shares of each and be diversified among all of these different yield max funds, clip, all that jazz, and maybe even to 100 shares at some point. So that's the trade. Let's go back to the charts and get to the second reason why I decided to close today instead of waiting for it to go up 20%. So if I go to the SPX here, as I showed you guys before, September is usually the most bearish month of the year for the markets. We did have a retest and a bounce on the weekly on the SPX, but that doesn't necessarily mean anything. Again, September historically is the most bearish month of the year. My thought process is if I hold this through September, I might end up giving back all of the gains that I made in the month of September, and then I'll be down on my position. So I might as well just take profit now. And it looks better on my monthly performance if I have more profit going into the end of the month than if I just take the chance of going into the most bearish month of the year and then get dumped on by big money or all these investors who know that this is bearish. And I'm going to show you guys right now. So if we take a look at 2022, you can see August, September, and October were pretty bearish, at least until the first half of October. And we go back here, you can see September and August of 2021 was bearish. We had a pullback there. September and August of 2020 was bearish. We had a pullback there. Let's see the next one here is September of 2019. We had a little baby pullback here, so it was technically bearish. That was a great buying opportunity though. And in 2018, well, this was actually when the Fed was raising rates under Trump. So usually this time of year would be bullish, but since the Fed decided to raise rates in this area right here, the markets did the exact opposite. That's kind of an anomaly. That usually doesn't happen. But September of 2018, we had a dump. Go back even further. See if I can find the 2017 one here. So we had like this little tiny baby correction. I guess 2017 wouldn't really be like bearish per se. If we zoom in here, you can see it kind of just flatlined. But for the last 5, 6, 7 years or so, this thing has been pretty bearish during September. Historically speaking, September is the worst month in performance in stocks. So I just wanted to get out, lock in profit, and be done with the trades. So I will let you guys know what my next trade setup is going to be. I have 2 days before I can make that move. So today's Wednesday. I wouldn't be able to put in another trade, assuming that it's a good setup, until at least Friday. When I do that, I'll let you guys know. I'll update you and you can see what my next trade is going to be. Okay. So, anyways, hope you guys enjoyed this video. Please like, comment, and subscribe. And I will see y'all later. Peace.